Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Thursday, the 16th of July. There's a slight edge of risk negativity falling away on equities, and that's come overnight where we saw some Chinese data, which has taken a little bit of the shine off the rally that we've seen recently on Wall Street. Wall Street looking to climb higher and break out, but just sort of edging over on those futures this morning. Coming on the back of Chinese data overnight, which, although we saw better than expected GDP data, there was also quite a concerning little read through on the retail sales numbers. You can see here GDP was better than expected, 3.2% on the Q2 numbers, but look at those retail sales, minus 1.8, and that is even when China has come out of lockdown. So that is a concern, and it's a concern because of what it could mean for other big economies coming out of lockdown as well. So there has been an air of risk negative moves today. The dollar has strengthened, dollar rebounded, but you can see that he's still trending lower over the past 2 months now, and this little rebound is likely to still just be a counter trend move that's likely to fall a bit short. But yeah, some interesting moves that we are seeing. Equity markets falling, dollar strengthening is the broad theme of the day. Now, in terms of data points today, the ECB monetary policy at 12:45, that's the sort of the main data point, certainly from the central bank point of view anyway. No change on rates is expected. To be honest, it's likely to be a fairly quiet affair in terms of the monetary policy update for the ECB. They've just recently in the June announcement they increased the PEPP program, so there's not really any expectation that they're going to do any changes, and it's likely to be a bit of a wait and see moment for the ECB there. Now into the US session, we're looking out for a clutch of data around 1:30. Actually, the retail sales is the first main data point. 5% growth on June. Will that be seen? June was supposedly going to be a decent month for the US. I think July is going to be the month where we see the data deteriorating. You're getting a bit of a read through on the Philly Fed Business Index, 20 down from 27.5 on the June data, expected to be 20 in July. We've also got the jobless claims, 1.25 million, still very high, still adding a lot of jobless claims on a weekly basis there. So 1:30 is a whole clutch of data for the US and markets to digest. So it takes me on to my chart of the day, which is the Kiwi dollar. Now, what we have seen is the Kiwi dollar just sort of consolidating in the past month, moving sideways in this band, 65.85 to 66 figure resistance. And time again, that resistance comes in around that point and falls over. It happened yesterday, but it is trading above this 65 figure, which is a basis of a pivot on the sort of month-long range now, and it's interesting to see whether this is going to be the moment that it breaks out. Now, I'll look at the momentum indicators. I'm not quite sure that it is. The RSI falling over back to 60, MACD lines still struggling a little bit and didn't really get going, did they, in that rally point to the top of the band. So the question would be, is this the moment that Kiwi breaks out? I don't think it is. I think we could see another slip back towards that sort of 65 figure area. Holding above that 65 figure area, it does maintain the outlook, which is improving still. But is it improving enough to drive a breakout? I'm not quite sure that it is. We're looking for a breakout eventually that just basically continues what essentially has been this recovery in place since March. And the trading bands do tend to break higher and then go on to achieve the target of the breakout quite easily. So we'd be looking at a test of 67.55 if there were to be a breakout. And I am anticipating at some stage in the coming weeks there would be an upside break above that 66 figure level. It's just whether it's going to be this time. I'm not quite sure that it is. On a very near-term basis, you can see that the market is just sort of losing impetus, still ranging, still showing ranging configuration on momentum and moving averages. So not quite sure this is the time. So I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website to sign up for our webinars, and also click to watch our Trader Talks videos to gain some top trading ideas.